Hey everyone, this episode is brought to you by River, the place that I personally go to securely invest in Bitcoin with confidence and with zero fees.
I would say the future is pretty much bright in terms of institutional peer-to-peer lending. I heard multiple times from other regions that they believe that institutional peer-to-peer lending, multi-sig, over-collateralized loan is actually the future of Bitcoin.
All right, so this is where I want to start. So I was there in Riga. I've never been to Riga. And this is in Latvia for folks that, if you don't know your geography, this is over there by Poland, kind of in that part of the world. Wow. I've never been to this part of the world. I was blown away. Riga was a beautiful city. It wasn't as hot as it is here in the south of America, in the southern part of America, in the US. But guys, thanks for hosting the event. Max, you're the guy from Hodl Hodl and Debify that put this conference on. Is this the oldest Bitcoin conference that's been going? Talk to us about that.
I think it's the oldest running Bitcoin conference in the world. Might be one of the few. I don't know the others. Definitely one of the recognized ones. We started this in 2017. It was actually in November, so you're lucky that you got it in August because that part of November in Riga is like freezing. It is what it is, you know. We started 2017, 3 in a row, then 2 years of MJ. He had a baseball, we had a COVID, so we had like 2 years in a row a break. Eventually from conference organizing, and then 2022 we kickstarted back. So it was the 6th edition. We don't know whether there will be a 7th one. We'll see. But so far I'm pretty much satisfied. And we also had Nostriga, so it was kind of cool, you know. I know that the topic of this episode is actually institutional adoption, but just wanted to say that I was a bit skeptical about Nostr before last week, before Nostriga. And then I actually missed a lot of the talks from Nostriga, but most of the people who went to the Nostriga, they went also to Baltic Honey Badger. And then magic happened at the Baltic Honey Badger, you know, especially intersection Bitcoin, social media, especially for me as a former journalist, it's kind of very much based social media protocol, which is Nostr, and I like it. So I kind of become very much bullish about Nostr in general. And yeah, it was just general great week, you know, Riga Bitcoin week. We got lucky with the weather, many high quality speakers like you, Jack Mallers, Jack Dorsey, a lot of interesting topics being brought up, and it was just a great week overall. I'm tired, but I'm happy, you know.
I'm tired as well. You guys, part of the branding or the marketing for the conference was it's the most OG Bitcoin conference that there is. And when it kicked off, I was just kind of like smirking because there's Adam Back, Peter Todd, like all these OG programmers from like the very beginning on the very first panel. I was like, all right, I get it. Like this is pretty amazing. And the conversations were very tech heavy compared to some of the other conferences that I've gone where there's, I don't know. I'm not gonna call out which conference, but it was very tech heavy, and you could tell that the people there are truly the builders in the space. And the highlight for me, it's interesting that you bring up the Nostr piece, because I agree. This was that was kind of the buzz the whole week that I was there, was how important Nostr is in order to basically be this like skeleton ID protocol in order to allow free flowing conversation and money exchange to whatever else was be. There's people there presenting on a decentralized version of GitHub, which, you know, if we're thinking about making everything more robust and we're thinking adversarially from the state trying to attack whether it's free speech or money itself. If you can go into GitHub and prevent people from downloading the code depositories that are all out there, it's just yet another attack vector. And it was fascinating to sit there through the Nostriga portion of this. And this person goes on stage. I think his name was Colby. He goes on stage and he presents this solution to decentralize GitHub. And so there's just people building things that, for me, it was kind of mind blowing to sit there and watch some of these talks and these conversations. I want to throw it over to you, Pascal. Your takeaway, you had a banger of a presentation when we were there. I just want to say the name of this presentation: Pitching Bitcoin to Boomers.
Yes, exactly.
Epic. But what was your takeaway from the conference?
Well, yeah, my takeaways is didn't get to attend like the entire conference. I only flew in on Sunday, but still from what I got, I was just really flabbergasted. That was really nice, because I haven't been to that many like Bitcoin conferences, at least not in a while. Like back in the days, there were a few conferences that I attended. So it was really refreshing to be at one of these conferences. And then I just getting to meet you, Preston, was really nice, and getting to know Max as well, a little closer, and just talking to all the people. So and in the end, it was the same for me. The Nostr thing, I kind of got Nostr pilled at that point in time, I would say. I mean, I dabbled in Nostr for a few days already in the past, but then I just left to the side. And now it really kind of struck a chord with me again, that this is so nice, and that there's like, when you get on Nostr, and now that I come back from Riga, I was like, the last 3 or 4 days I spent on Nostr, and it was really, the vibes that you get, it's really nice. So it really just fired me up, and happy to maybe go to more conferences in the future again. Yeah.
So I want to give the audience a little bit of background on you, Pascal. So you're from a Swiss bank. Marsky Baumann is the name of the bank. You work in the division called RChip, which is this Bitcoin crypto-focused portion of the bank. Tell the audience a little bit about your role and kind of what the bank's trying to accomplish with this particular arm.
Yes, exactly. Yeah, well, I joined about a year ago. Maybe to give a little context, I was really like self-employed, like 100%, in the Bitcoin and crypto sector, but mostly focusing on Bitcoin, And then obviously I was even like a digital nomad traveling the world, like total sovereign individual stuff, so to say, And then a year ago, I got approached by this bank, like we are looking for someone who could help us on the private client side to scale things up. And I was like, dude, I haven't worked at a corporate in ages, why would I ever go back to a bank like this, And then it's like a real traditional bank, 90 years old, quite established, quite trusted by many folks. So I was like, okay, let's give it a try, And then I got to meet all these people, very nice crowd over there at the bank. They have also been in Bitcoin for the past 5 years already. So it was mostly on the corporate client side where they have been big, in sort of like banking, like different foundations, different companies, like some of the names probably would sound familiar. They're really an OG bank, so to say, when it comes to Bitcoin. And that kind of, really convinced me. And then also just the way they approach Bitcoin, also from a C-level approach, or C-level angle, they are quite open and they do understand Bitcoin. They do understand what it's about. So I was like, okay, it's time probably for me to go back to this corporate world once again. Also to kind of help, to help them to get it right, to help them get them to understand how Bitcoiners think and what their preferences are, because I've been in the sector for 8 years as well. So I have some experience, I would say, and that's how I got to work with the bank. And I'm now more on the private client side, just helping in the investment team, with portfolio analysis, and just try to convince people to invest in Bitcoin.
So Max and I have had conversations about the future of borrowing and lending. I would highly encourage people to go back and reference those conversations. We'll have links in the show notes to those conversations. But if I was going to summarize some of this very quickly so people can kind of understand why we're going in the direction that we're going with the conversation for the rest of the show. Max ran the HODL HODL exchange. This exchange is a peer-to-peer borrowing and lending platform. And in the conversation that we've had in the past, we've talked about that this idea that peer-to-peer seems to be the lowest risk way in order to conduct borrowing and lending, because instead of tranching assets like you typically see in these fractional reserve banking systems, and then like distributing the risk across all of these different vendors or participants, you know exactly who the other side of the trade is. So as an example, let's say Max and I did a borrowing and lending agreement with each other. Let's say I was borrowing dollars, and they would be dollar stable coins, and I would have to post some collateral. I would be posting that collateral in an over collateralized way. So let's say I'm borrowing $100,000. I would have to post $150,000 in a joint collective escrow account between the two of us. If the price of that underlying $150,000 worth of Bitcoin is dropping below the amount that I borrowed, $100,000, it would immediately get liquidated, and then the lender would be, paid back their $100,000 of the amount that they lent out. And it's because this is a 24/7 market and it's happening all day long, this reference rate of the collateral that's being posted is always there and always being referenced and always being checked. And as long as it's over collateralized, both sides of the exchange are being protected in a pretty riskless way. Where it gets convoluted and gets, what's the word I'm looking for? There's more risk, is let's say that there was two people on one side of it, and the one person was really, and it's not over collateralized, and the one person's underlying assets are dropping, and it's not something that's super liquid. This is where a ton of risk really enters. So if you want to learn a lot more about like what I just said, if that sounded like it was just a bunch of terminology that didn't make any sense, go back and listen to the conversation with Max and I, because we go into a lot more detail on these ideas of a much more riskless way in order to conduct borrowing and lending. Where I want to go with this, I'm sorry I'm talking so much, but where I want to go with this conversation is taking this idea and talking to a person who literally works at a Swiss bank and try to piece together like their ability to start wrapping their head around what, in my opinion, and I know Max's opinion, is that this is the direction that borrowing and lending needs to go in order to reduce risk to all the participants in the system, because Bitcoin works very differently than legacy fractional reserve banking. What did I miss? Let's start there. What did I miss, or what would you say is additive to what I just described? And did I get any of that wrong, Max? Because I'm not the expert.
No. It was good. The only thing that HODL is not exchange, is actually trading and lending platform. Another thing is that HODL is actually micro lending, and specifically last time we discussed DeFi, which I think would be a good reference why also one of the reasons why Pascal is here, not only because he's a banker who's into Bitcoin, but also because DeFi is actually a product that we're building for banks, in particular for banks that are already in the space, for those banks who want to enter the space. It's kind of institutional peer-to-peer. And another important part which you missed, when the liquidation happens, a lender not only gets 100,000 that he lent out or she lent out, he actually gets 100,000 plus the interest that the borrower owes him. So it works like this. So it's basically, I don't like the wording risk-free, obviously, because it's a meme already in the Bitcoin space, But I think it's pretty much the way to do it. Again, because it's over collateral, because it's Bitcoin, it works 24/7. And you have, as a TradeFi people, you have now tools such as DeFi where you don't need to use a middleman. And the good thing that we actually bring your borrowers and we bring your customers. So I think that's the direction that we're going. However, of course, from my experience, like we had this conversation with you specifically for institutional peer-to-peer lending like 5 months ago. Then we launched DeFi, or right at the time. So we launched DeFi. It's actually still in beta, although it's operational. We already see volumes. But from this 5 months, I can tell you like two things. First of all, Switzerland is really, really amazing in terms of attitude towards Bitcoin, corporate attitude. I mean, and I'm not telling this because DeFi is in Switzerland. I'm telling this because that's actually a market where banks understand Bitcoin, and they do provide you loans. They do open your accounts. If you go out and look at the train station, there will be a huge banner from one of the cantonal banks saying literally, like, you have a Bitcoin, come to us, open an account. They don't make big ads. And the second thing is that actually, I'm surprised how many TradeFi people actually gets the institutional peer-to-peer lending, judging by the amount of requests we have to be onboarded on DeFi. I wasn't skeptical, but I thought it will take us a lot more effort and work in order to explain to them why it's a great opportunity and why it's a future. Like, for example, at this returning to Riga, at this Baltic Prime Venture event, we had representatives on the C-level from 3 Swiss banks that actually came to Riga, not only because of Baltic Prime Venture, but because they wanted to know a bit more about DeFi. And these people are actually hardcore Bitcoiners. They're less into crypto; they're more into Bitcoin. And I'm surprised with all that. And they do understand the value proposition of institutional peer-to-peer lending. But you need to understand that, again, Switzerland is very conservative. Banks in Switzerland are very conservative. And it's not only about Bitcoiners being in these banks, making a decision. There's like a bunch of people who needs to coordinate to make a decision. But I think, again, we're getting there. So I would say the future is pretty much bright in terms of institutional peer-to-peer lending. And like, I heard multiple times from not only Swiss TradeFi people, but also from other regions, that they believe that institutional peer-to-peer lending, multi-sig, over-collateralized loan is actually the future of Bitcoin lending. We're not there yet, but we're getting there.
Just a little proof in the pudding from my point of view for people when they're thinking about this and hearing this. So, Max, you've been doing the peer-to-peer borrowing and lending for 2 cycles now, 2 pretty much 80% downturn cycles of what people are posting as collateral, and has never, like, the hodl and now DeFi has never blown up. And I think when you look at all the competition, especially in that last cycle, you had the what were some of the names? You had FTX, you had the Gemini lend program, you had
BlockFi, Celsius,
BlockFi, Celsius, all of them, right? They were tranching collateral. They were taking collateral from institutions, and then they were taking collateral from retail, and they were mixing them together, which gets to this idea that we were saying earlier, that peer-to-peer really seems like it's the only way to do this in a responsible kind of way, that platforms and individuals don't blow up. You've experienced 2 full cycles and have never had an issue to date. Do institutions, this is questions for you, Pascal, do institutions understand how insanely powerful that idea is, and that a person like Max, you're the only person that I know in this space for 2 full cycles that have done what you've done without blowing up. So do the institutions recognize this for what it is from a risk appetite standpoint, and for how to do this responsibly?
Well, good question. I mean, I can't speak for each and every bank, obviously, and also maybe there's different like opinions and knowledge, like distribution in the bank as well, where I work. But I would say generally, maybe we're not quite there. I mean, there's a few people obviously within the bank who are passionate, again, who have been in the Bitcoin space for quite some time, and they might be getting it because, they're talking to peers like you and others, and they really understand this. And but then within the broader sector, or within the broader, like, also then these people I'm not sure if it has really clicked for them already, because what I've always heard, when I talk to bankers, it's like, okay, you have this Bitcoin, it's quite volatile, and I mean, lending and borrowing is usually in the fiat world done uncollateralized, because the question I often get is like, dude, why would I take up a loan? Why would I borrow if I have the money in the first place? It doesn't make sense, And then the people are like, so, and against crypto or Bitcoin, you don't want to lend uncollateralized, because that would make it even worse, so to say, and that's really where I think we still have to kind of work on the understanding, also, as I said, maybe how Bitcoiners think, if you then kind of understand, okay, these Bitcoiners, they now have the Bitcoin, they're fully orange pilled, they believe in its future, they also have a clear understanding of where it's going, then they're like, okay, I don't want to sell, but at the same time, I kind of want to realize the value of this Bitcoin already today. So that's why I want to do the over collateralized borrowing, so I can kind of actualize some of the value already today, and then maybe keep it as a generational wealth and hand it down to my kids and then their kids and stuff. So that's really where I think we still have to do some teaching and get that across, that idea, so people really understand that, as you said, it's a lot different. And then also with the risks, I think they would learn along the way, because again, it's not something that maybe fiat banks are used to, because there you don't work with collateral that much, at least, or I mean, sometimes it's not fully reserved, Maybe with a Swiss private traditional bank, it's a little different. It's not one of these systemically important banks. So again, maybe there it could click further because, there might be more use to this. So that's where I have my hope as well. But we're working on it. But I don't think we're just there. Yeah.
This is such a salient point because for people that haven't held Bitcoin for, I would argue, a whole cycle, and I'm calling that 4 years, they don't appreciate the Bitcoiner's lens or how they're viewing this. And let me define this for people. As a person who's gone through a full cycle and a Bitcoiner, they're saying the last thing I ever want to do is sell these Bitcoin, right? That's the last thing you want to do because you've literally watched them go up by 50% annualized through that cycle. And so you're saying the last thing I ever want to do is sell this thing because it might keep moving at this pace. And if I'm not the one that owns it through that period, well, my buying power is getting debased by half as much through that holding period. And so if I'm at a bank or I'm at an institution and I'm saying, well, if you have $150,000 worth of Bitcoin, why do you need to borrow $100,000 against it in this over collateralized way, which was exactly what Pascal just said. And the answer for that institution or for that executive that's maybe listening to this over in Switzerland or wherever that works at a bank, the reason why is because this thing's moving out so freaking fast. The last thing I ever want to do is sell my Bitcoin. I want to borrow against it. But I want to do it in the most risk-free way possible by somebody not tranching my Bitcoin with somebody else's garbage collateral, right? That's the Bitcoiner's lens. That's the Bitcoiner's perspective. And there's going to be more and more of us that are kind of looking at the world through this lens moving forward. And I think let's pivot this to where I think the biggest use case is. Lots of Bitcoiners with substantial amounts of net worth in Bitcoin want to go buy a house, but really struggle to basically borrow against their Bitcoin in order to go do it. And they don't want to sell their Bitcoin to do it. So they continue to live in they live very humbly because they don't want to sell their Bitcoin to go buy a nice house. How do you see this evolving in a way that, and this is really important for people to also understand, real estate is very low frequency turnover. It's very illiquid and it's not getting priced, by the second, like the speed of everything else. So how can we possibly incorporate this in a way that doesn't become irresponsible? Because we just talked about peer-to-peer. Bitcoin is the ultimate collateral being the way to do this. And now I'm talking about mixing it with, real estate, which is super low frequency turnover in illiquid markets.
I mean, mixing it with real estate, I think sometimes we kind of overcomplicate things. Why do you need to mix it? Just borrow against your Bitcoin, go buy real estate. That's it. You don't need to mix it up. I mean, there are Bitcoin-backed mortgage products, and we're also thinking about creating one in the future. But the problem with that is every market, the real estate regulation in every certain region or in every certain country is very much complicated. starting from how, as a lender, you will liquidate the collateral that is in the real estate in case borrower fails to repay the collateral, ending with how you inform that, how if God forsake, borrower dies, how their kids, their family. So it's very much complicated. I mean, in some regions, like Bitcoin-backed mortgage products, they seem to be very rational and logical. Like in particular, we have some regions on our roadmap. I'm not going to disclose them, but they're both Bitcoin friendly and also very much friendly in terms of real estate regulation. And also these markets are pretty much good in terms of real estate investment. I mean, like not just buying a house, but also buying a house, living there, and then at some point, maybe 5 years after, you want to sell it, and there will be a secondary market that you will even make money. But overall, I don't think we need to overcomplicate things and mixing Bitcoin with real estate. I mean, if we have enough liquidity in just Bitcoin-backed lending, through such a product as DeFi, building a global liquidity aggregator for every Bitcoiner, then what's the point? You can just go and borrow against your Bitcoin and buy real estate. That's it.
But
I mean,
Matt,
that's the inevitable.
To that point, so I agree with you. But I think the person who's listening to this that understands this market pretty well, the interest on this is very high, like double digits. And if you can lower that interest expense by half as much, because maybe the value of the property is 500,000 or $1 million, and then you're posting a similar amount of Bitcoin in value terms, and your LTV on it is, what would that be? A LTV of 2. Then I can maybe get a 5% interest rate. I think there's a lot of people that are going to be, and I want to hear your opinion. I think there's a lot of people that would be interested in a product that reduces their interest expense by a ton by incorporating this in there, because they're just dealing with such a high interest expense when it's not. So I know that's not what you're interested in doing at Debify, but I see the market maybe trying to move in this way. And so really kind of a question to Pascal or Max, either one of you guys, how do you see that evolving? And because I think the appetite's going to be very high.
Yeah, maybe if I can quickly speak to this, the way I see it, or the way I think this will unravel is really, I mean, why are we offering Bitcoin to buy now for our clients? Why can they custody it with us? Why can we buy it? Why can we put it into their portfolio? It is really because of two reasons, I would say. For one, it's like people who are passionate about this, and have entered the bank, and maybe they have worked for the bank for quite some time, and they have pushed for this, because they want to see this industry grow as well. That's one of it, one reason. And the other one is surely client demand, people were actually demanding this, seeing their peers right and left invest in Bitcoin, and I can't do it, then you're going to pressure the bank. So either I can do it at the bank, or I will probably move to a bank that makes it possible, And the same thing will probably happen here as well with the borrowing and lending, because as you said, there are a lot of wealthy Bitcoiners, and they want to do it, and they will possibly want to do it through solutions like Debify that Max is building, that it's also as transparent as possible, that they can remain self-custody some sort, or collaborative custody. So they remain in the possession of the keys, and just have the transparency. So I think that's really how it's going to go. And from the bank's perspective, again, I mean, it makes sense to kind of also broaden the services that you have, because now maybe you are still in front if you offer Bitcoin as custody and just as a portfolio add-on. But in maybe 2 years' time, every bank, at least in Switzerland, that's what I feel, will have that offering. And then how do you differentiate, And that's exactly where something like this comes in, and why the bank is already looking at this, okay, this is the way for us to differentiate. And then further down the line, maybe you dabble in it with a few designated clients, you go super conservative just to test things out. And the more you grow in experience, the more you familiarize yourself also with the risk management side of things. And then at some point, you can start mixing up real estate, Bitcoin. So this will be a natural way this will evolve. It might take another 2 to 3 to 4 years until we're there, but I can totally see this happening.
One of the concerns that I'm seeing right now is just the proliferation of ETFs. and the Bitcoin ETFs. And I suspect that traditional finance is going to start using that as what they're posting as collateral. And where I get concerned is, the weekend, the spot price is still moving like crazy. And depending on how much of a loan to value ratio traditional finance is using, mixing that with their fractional reserve system, I think it poses concerns and issues for anybody kind of posting ETFs as collateral as opposed to underlying Bitcoin. Is this a concern that you share with maybe the directions that institutions, particularly here in the United States, are taking? And if so, help define that more so people can understand what we're talking about here.
They literally care less about ETF as a collateral because we don't provide services for the ETF as a collateral in that way. We only provide services if you have Bitcoin. But I mean, in general, I do understand where you're getting. I think that that's fortunate or unfortunate. That's just how the market works, And it reminds me to some extent, like a lot of synthetic products during the subprime crisis, back in 2008. Well, some companies are just going to get burned, that's just the cycle, you cannot prevent, you cannot prevent these things. And usually like ETFs, they get collateralized for short-term loans, trading, liquidity, that type of stuff. So me being a Bitcoiner, thinking short-term is not actually on the same page. I don't think that works, but I think that if some companies, I don't wish this to them, but I think if some companies are going to get burned with ETFs, Bitcoin ETFs as a collateral, or just as a Bitcoin ETFs, that's just going to speed up the educational process and them coming to actual Bitcoin standard, meaning holding your own keys, meaning using the actual Bitcoin, meaning understanding how the multi-sigs cold storages work. That's just going to speed up the process. So far, I think that the good thing about Bitcoin ETF for us is actually helps to talk almost the same language, or at least say the word Bitcoin, and they just not gonna, say, okay, we don't understand that too volatile. They already know that. They already know that there's BlackRock doing this stuff. They already know that there's a bunch of huge institutional liquidity makers, market makers doing this stuff. So for us, it's kind of easier. It's actually helps mass adoption from the TradeSpire institutional perspective. I think that again, there's also a very important question or a very important thing we need to distinguish: mass adoption in the corporate world and mass adoption in everything outside of the corporate world. I mean, for Bitcoin being mass adopted, tools like Nostr, tools like Lightning, tools like easy multi-sig cheap cold storages helps to be mass adopted across the globe, whether it's an emerging market or it's more developed market for individuals. For corporates, ETF helps a lot.
I mean, I have a similar hunch, that what Max is saying. I mean, whenever I get asked, what are the biggest risks, maybe next cycle or maybe even this cycle, with Bitcoin, I usually point out that this could be one, the ETFs. I mean, we all know Caitlin Long, and she's stressing this point again and again. There's no central banks in Bitcoin. So if you mess up there, things can get nasty. And I think at some point, one institution will mess things up, which will then be, again, a learning curve for others. I mean, when I talk about Swiss banks, and that's the great thing, again, with a private traditional Swiss bank, I mean, they are really conservative. So they also want to, on the risk side, they want to keep things as conservative as possible. I mean, how they think, it's more like, okay, if we have this service and we allow Bitcoiners or other people to borrow against their Bitcoin collateral, we might not be competitive enough, because we will have a very low TVL. You can't really max out your credit line, so to say, and that's why they are more anxious or not anxious. They're afraid that they might not be competitive enough. And there again, you maybe are not competitive enough if you have a person who really wants to borrow against a Bitcoin and max it all out. But if you have like a very conservative hodler, and I would again say many of the Bitcoin hodlers I know, they are exactly this conservative type, they would actually be fine with this and say, okay, cool. Just do it with Bitcoin, no ETF, obviously. And again, really low TVL. So I don't run the risk of getting liquidated. And there again, this is also how I try to talk to these bankers and try to tell them how Bitcoiners think that they didn't, that's a light bulb moment. I didn't know that there could be a business case in the first place, So again, that's just interesting where we still have to go with that.
The ultimate irony for me, if we go back 200, 300, 400 years, like what is the essence of a bank? And the essence of a bank is being able to custody securely collateral and deposits, whether that's gold or whatever it was, right? Like at the essence of what they provide, it's security of custody. And it's ironic to me that as all these ETFs are being rolled out, that they're leaning into owning these and kind of using those as collateral, and they're just a wrapper on underlying keys of the underlying Bitcoin, right? They're not wanting to custody that. And what Max and Pascal are talking about here is using the real Bitcoin, the real keys, and securing these real keys in custody to over collateralize, the Schrute bucks or the paper slips of fiat. And I think it's so ironic to me that this is lost on the largest banking institutions on the planet, that they're playing on a wrapper and not the underlying thing, and learning how to custody it and manage it and secure it at all costs. It's just crazy. It's nuts, actually. One of the most common questions I get asked from family and friends is, Preston, where do you personally buy your Bitcoin from? And the answer is really simple. I buy it on river.com. Not only can you easily buy Bitcoin with zero fees on recurring orders, you can have peace of mind knowing Bitcoin on River is held one-to-one in multi-sig cold storage, all while being fully licensed and regulated in the United States. Plus, their relationship managers are US-based and available by phone for you or your business. Additionally, River has built their own infrastructure from the ground up, which means they don't rely on third parties to function like other Bitcoin exchanges. River also just created a new feature not found anywhere else called River Link. It allows you to send Bitcoin over a text message to easily orange pill your family, pay a friend for dinner, or send a gift. There's a new standard for investing in Bitcoin, and River is setting it. Go to river.com/fundamentals and get up to $100 free when you sign up and buy Bitcoin. That's river.com/fundamentals. In a world where convenience often compromises security, many investors settle for solutions that do not fully meet the demands of Bitcoin security. That's where the Bitcoin Way comes in. Offering a personalized white glove service, they will guide you through every step of the way to achieve full self-custody, ensuring you adhere to the strictest self-custody standards. Their experienced team helps establish robust security practices that cover all aspects of self-custody, cybersecurity, and privacy. Their ultimate goal? To empower you to become fully sovereign. Beyond securing your Bitcoin, they also offer services such as inheritance planning, Plan B strategies, assisting in relocating to Bitcoin-friendly locations to further enhance your sovereignty, and much, much more. Take the first step to true financial independence. Visit thebitcoinway.com/TIP to schedule your free consultation call. Don't delay in securing your generational wealth the right way. Opt in for security over convenience and protect your future. Your family line will thank you.
I mean, one of the things that you mentioned that I think they went from secure custody to just custody. They just want to custody your funds. And then there's
bingo,
like that type of asset as Bitcoin, which completely changes the game. Provides a great self custody opportunity and provides collaborative custody opportunity, and that's the trick. Because like centuries back, banks were they were like custodians of the funds. Literally, they had a possession of your funds, which is not a bad thing. I mean, like for some people that's the way to do. For majority, that's the way to do. But then there's, again, as Pascal mentioned, there's like new type of people emerging now, that like Bitcoiners, or people who understand that Bitcoiner actually is as a like super asset provides a very nice self custody or collaborative custody in this case, like properties, and that's where the paradigm shift needs to be happening, because like many banks, they still want to ask, can we add it to our balance? I mean, like can we do this in a custodial way? Can we do this and that? And again, when I pitch the DeFi to them, I usually say, like, guys, you can actually just provide multiple options to your customers. We have a custodial lending, which will be a bit more cheaper, but then again, every sane Bitcoiner understands what custodial lending means. Not your keys, not your coins. Or we have a non-custodial lending, whether it's through DeFi or any other platform out there, where the interest rate could be higher, because obviously banks need to compensate, because they cannot re-lend that money and make more on top of that. But then again, it's just, it's just better for a customer.
That point there, that last point, that they can't fractional reserve it, and then the money multiplier is what we're really talking about. And the revenues for these banks are so heavily reliant on their capacity and their ability to exercise this money multiplier. And for people that aren't intimately familiar with this idea, basically $100 deposit turns into, and excuse the math because this math isn't right, but let's say you put $100 in deposit into the bank, that then turns into $1,000 worth of lending because of the way the fractional reserve system works. So if you think about how much proceeds they can make off of 1,000 from only $100 deposit, it's a lot. And what we're talking about here is collapsing this money multiplier down to what the core deposit is, which would be, call it $100, and that they can only make revenues off of the $100 deposit. That's bad for the banks. Like, this is very, it will collapse their multiples many times from where they're at right now, because they can't play these fractional reserve games. Where I wanted to go next, Max and Pascal, is dollar stable coins. One of the core ingredients to borrowing and lending is, if the underlying collateral, let's say we put $150 worth of Bitcoin into escrow, and the price fluctuates, and now the value of the dollar, or the value of the Bitcoin's $100, and you have to liquidate the borrowing lending agreement. You have to have, time is of the essence in order to execute this transition. You need 24/7 markets. You need a dollar or a euro or whatever fiat is on the other side of that to be, in my opinion, to be tokenized in order for this immediate settlement to happen, so that there's no risk in, oh, well, that was over the weekend and we weren't able to turn it into dollars for 2 days or whatever it was, because we couldn't access the Fed wire or whatever Swift network we're talking about. Talk to us about your point of view on this idea and the future of stable coins, and how important this immediate settlement into some type of fiat is. And what do you think that the regulatory environment is going to look like moving forward as this becomes more and more popular?
Yeah, maybe from my point of view, I think that's exactly right, what you described here, that you don't have this mismatch, and then some sort of settlement risk, if you can't then not settle it because it's just the markets are not open, or you don't even have like the fiat that you need on chain, so to say. I think it's a huge risk, and it's also something that we have been discussing inside the bank, and people who are maybe not that close to Bitcoin are asking exactly this type of question. Maybe one step back, there's even the problem that these people don't work on the weekends, and then they're like, oh, then I have to work on the weekend. And so, no, but if you could then kind of automate it, through on-chain stuff, then it wouldn't have to be like this. But for this, fiat needs to be represented somehow in a tokenized way. And I think, in Switzerland, this has been discussed for quite some time. We just had the regulator publish, I think, a paper on stablecoins again. I haven't I haven't really read it in thoroughly because it wasn't that well received. But I think in the end, we have to go down that route, and there have been some approaches, like with a Swiss stable coin for sure. The SNB is testing things out, like this is our national bank. So they have also been looking at this because they want to provide this cash lag on chain, But then again, I mean, we had this one stable coin issued by one of the institutions in Switzerland, which kind of interfered with the negative interest rate environment that we had in Switzerland, and people were flocking into this stable coin because the stable coin didn't have negative interest rates. And then all of a sudden, I guess the Swiss National Bank didn't like that because it was kind of destroying their business model, which again, why this stable coin was probably calmly taken down, so to say. So there are all these moving parts. I would assume at some point it needs to come just to counter this risk that you described. And I think it's really this knowledge asymmetry that we have to tear down, and then people will get it. And that's one of the moving parts that will come.
I mean, I would say probably very bad thing in terms of being a Bitcoiner, but I actually like stable coins because, again, like if we say that fiat is a bad form of money, then stable coins are just better form of bad money. I mean, in the way that it's direct settlement between two individuals or two entities. There's always a blockchain record, which is amazing, especially like if we do a deep dive into peer-to-peer lending. I mean, you don't need to prove me that you have sending stable coin. You just upload the transaction ID and like in HODL or in Verify, we automatically show that, okay, success, you have received the loan to your address, or you have repaid the loan, and a lot of things could be automated. But eventually, I think that stablecoins also helps a lot in terms of Bitcoin adoption. I mean, as soon as the individual has access to stablecoins, automatically he has an access to Bitcoin, because you can literally swap any stablecoin to Bitcoin. That just helps. Like, look at Argentina, look at Latin America. Like in Argentina, you can actually live off with stablecoins, and that simplifies a lot of things. In terms of regulation, again, region by region, there's always some regions that lack development. They tend to over-regulate some stuff or even ban some stuff. And there's always regions who are more like, they're more adapting to the current thing. And I think, again, like stablecoins is amazing. And I would actually prefer them being used frequently, more and more frequently. I would love actually to see other types of stable coins being used frequently. Like we have mostly the most common stable coins now are Tether and Circle USDC, which is backed by dollar. I would love to see something with euro as well, and Swiss francs and other currencies, because at the moment it's basically all liquidity is in USD, which is good probably for US consumer or user, but I would prefer, like as a European Union citizen, I would actually prefer seeing more opportunities to use euro as a stable coin.
Max, I agree with what you just said. The only thing that I would push back on, and I think that this is a really, really important point for everybody to keep in mind, the size of these stable coins, Tether and Circle, are so huge that and I don't know that, I have no idea like what the reality is, but I would be blown away if there's not some type of close government connection between them and the just because of the sheer amount of treasuries. Like I know Tether, I think they're at 118 billion of AUM, and they're number 18 on the list. And I've just talked to Paulo recently on the show. So like I have the utmost respect for these guys and what they're doing. But I would imagine that, let's say that there are Tether in somebody's hands and the US government doesn't like who that person is. I would imagine they could go to them, tap on their shoulder and say, we don't like these people having, $300 million worth of Tether on their books. We want you to, basically take those dollars away from them. And I think they're in a position that they have to comply, right? And the reason I bring this up as a risk is if you are that person, if you're that bad actor, quote, I'm using air quotes here because everybody's got an opinion of who's bad and who's good. If you're that person and you're using these dollars as collateral or whatever, it's not like Bitcoin, in that there is still kind of a voting member in the loop of whether you're actually allowed to use it or not. And I just want to throw that out as a highlight and something that I think is just an important, side note.
Of course.
Yeah.
It's true. But as at the beginning of my my monologue, I said it's just a better form of bad money. Again,
yes.
If you are like in having your money in the bank, then if you're a bad actor, as you said, then your account's just going to be freezed. Same way it works with stable coins. But the essence of the stable coin is that actually, if I'm not a bad actor, that I can freely transact without being reliant on the bank, just, I can send you now.
Yeah. And your phraseology of it being that is perfect. Pascal, I'm sorry, I interrupted.
Yeah.
Go ahead, sir.
Now, just one last point on this. Exactly. That's what I've been seeing. I'm lecturing on this topic. I'm talking to the bankers, and like maybe 4 or 5 years ago, people were always asking this question: how is a CBDC or a stable coin going to be different than Bitcoin? And nowadays, I think Saylor and all these people, they have done a great job in like really pointing out why Bitcoin is so much different and why there is so much. It's just a different beast, And people have been getting this more and more. And that's why I think I'm not worried when there's stablecoin adoption within banking, And I think it will come because, like, if we look at where stablecoins have come from, they have been adopted with the crypto exchanges, in the first place, because like all these people were speculating and they needed to have some settlement layer there. These exchanges didn't want to have like the fiat risk again, the one that banks will now be confronted with, and that's why they came up with these stable coins. That's how they initially found adoption. And I think it's going to be the same with banks, when they now build out these products, the borrowing and lending, and potentially more products where they integrate with Bitcoin. They will have to kind of have something where they can, with as least risk as possible, settle the cash lag. And that's why I think these stable coins will inevitably make it into banking for sure.
Max, we had an interesting exchange on stage. The gentleman that created Stalker, which is an exchange over in Europe that is tokenizing real equity, not some clown coin.
Yeah.
They're taking, as an example, they have MicroStrategy stock that they have taken custody of. They've issued a token that you can freely trade 24/7 over the weekend, whatever. And when we were on stage and we were talking, this came up as a point of discussion as why can't basically the tokenized MicroStrategy be used as collateral in borrowing and lending? Talk to the audience about this, because I think you and I understand the risk. Why don't you explain what the risk is today, at least, but where maybe some of this is going, call it 5 or 10 years from now?
I mean, like, gentleman's name is Arnaud. So he's actually, they're actually providing liquidity on Debify, and very much sophisticated in terms of securities and everything else. But there's another thing which is called Liquid. And Liquid is kind of layer 2 solution or solution on top of Bitcoin, which allows you to create a different type of basically wrapped securities on a kind of liquid blockchain, but it's like very much similar. You can actually use Liquid to build a multisig, and then you can use the same approach, meaning that you can take your securities, which is MicroStrategy, you can put it in a multisig and you can borrow against that. So there's like the security risks are similar. The only difference is that price of the underlying asset. I mean, if you do this with Bitcoin, the underlying asset is Bitcoin. If you do this with MicroStrategy stocks that are wrapped into Liquid, then the underlying asset is MicroStrategy. And the difference for me is very clear. Bitcoin is decentralized, I would say hard manipulated form of money or assets. There's no one single person who can go out Friday evening and say, okay, like I'm done with Bitcoin. I'm buying Doge, whatever. We have that person, who's doing this, but like Honey Badger doesn't care. We already don't care about what he's saying, literally. And with the company or with the entity, with stocks of the company, there's a certain risk. As from my perspective, that there's always one person or group of the person who can decide on how this company is going to evolve and what this company going to do. Like, imagine if at some point Elon Friday evening after markets are closed, he's like going out to Twitter and saying, "Okay, I'm done with building Teslas. I want to build fridges now or whatever." Like iron boards, whatever. And I'm going to do that. I'm going to innovate in that market. Probably Monday, like Tesla stock will go like this because people will eventually figure it out or think that he went crazy. And with Bitcoin, that doesn't happen. I mean, it's like whatever you say, there's no CEO of Bitcoin. There's no person. People that even don't know, and that's the beauty of the Bitcoin. Still, we don't know who Satoshi Nakamoto is, and I would say that's the leverage that the government can use, and that was like very nice strategy in sense not disclosing who's creator of the Bitcoin is. So I think that's the difference. I mean, but the promise of liquid and the promise of wrapping all these stocks and using them as a digital alternative, it kind of works similar as stable coins and fiat. In that way, it's kind of interesting because again, you can borrow against your stock in non-custodial way, which is kind of interesting,
Mm-hmm. Mm-hmm. Pascal, what's your thoughts real fast from an institutional standpoint and how they're thinking about tokenizing equity?
Yeah, I mean, at Swiss Bank, we're also looking at this, because again, in Switzerland, we have this unique situation that you can actually issue a digital token, a digital share token, and it comes with the exact same rights, legal rights, as with the normal traditional share, because the Swiss law was changed and now you actually have a share token, which is the actual share, So we have been looking at this. There have been startups that have been issuing this, we have been trying to maybe custody this because at some point, again, I believe maybe people want to borrow against this as well. And then again, it's up to the person to understand that it's different from Bitcoin. My feeling is it's going to be either two scenarios, because the way that this whole tokenization thing is happening, and everyone is like jumping on this train. I think it has to do with the underlying pressure that like our today fiat money doesn't hold any value. That's why the world is increasingly financialized and everyone has to become a speculator, and like whiskey and shares and maybe everything that you can think of needs to be tokenized so people can speculate. And maybe this will happen in the future still, we don't know, but maybe Bitcoin takes away this monetary premium with all these things. And then people understand, I don't have to go speculate on the latest tokenized thing, but I can actually just buy Bitcoin. And then maybe a few shares like MicroStrategy that stand like the test of time will be used to borrow against. But I see really these two scenarios where this could go.
All right, guys. Max, I'm assuming if there's institutions listening, financial institutions listening, your DMs are open at Debify. Is
always. I'm always like 24/7. The same way as Bitcoin, we're always there. Just send us a message.
Pascal, what's your message to the audience?
Yeah, I mean, if people are interested, and taking a look at the bank, if they have Bitcoin that they want to have custody with a traditional bank, I mean, hit us up. We would be happy to talk to you. And I mean, always happy to share knowledge when it comes to investment and Bitcoin and how these two things interact.
Max, did you have anything else? I was joking a little, slightly joking, but
yeah. I mean, my message would be like, don't be the last in the line. There's a good opportunity to be the first, and that goes with the TradeFi companies, where they have some funds, a large funds that are onboarding at the moment, already talks with banks. So don't be the last one in line, because it's like the pace of development, the technological pace of development is just astonishing. I mean, look at what happened with like when iPhone was first presented. Now we cannot imagine like using buttons in our phone. That just like literally less than 20 years. I mean, and we're already there. And Bitcoin is amazing. Like if you're gonna look at Bitcoin technological development cycle, it's even more. Even Nostr, you know, it less than a year or around a year, and it's already like booming at the moment and purple pilling a lot of people. And on the other side, in terms of borrowers, like I just want to encourage individuals, like if you're using whatever service you're using, whatever bank you're using, and they don't have any proper borrowing and lending, and you're a Bitcoiner, just, you know, connect us. You know, we've been intro to some of our existing lenders by their customers who just want to borrow. They want to borrow from the institution they like, they know, they've been verified with, but they just don't want to give a custody of their funds. So these are like two things that I just wanted to point out.
Maybe a real last word of encouragement to like Bitcoiners, you know, who want to support TradFi institutions and kind of like don't know if they're betraying the ethos of Bitcoin. I would encourage them to do so, you know, because in the end, I think it's going to happen anyways. This is just how the world and the like course of things is going to unravel. And that's why I hope we as Bitcoiners, we do it correctly and we do it in solutions that Max and other people are presenting, you know, that we can push the TradFi more to Bitcoin than vice versa, you know, and that's why I want to encourage these people to actually do this. Yeah.
Guys, I can't thank you enough for making time. Fascinating conversation. I find this just absolutely mind-blowing, some of these ideas. And thank God for Bitcoin, right? Thank God for Bitcoin.
Yeah.
All right. We'll have all that in the show notes for everybody, you guys. Thank you for your time.
Thank you very much.
Thanks, Preston.
This is a whole new category of product, a super app run by communities, not by centralized parties. And in some of these countries, many people have literally, this is the only app they have on their phone. It's the app that can replace all other apps, basically.